Hello, my name is Kapches. I'm the president of Chestnut Real Estate. This is our kind of a year-end recap of what happened in the Toronto area marketplace in 2018. Quite an interesting year, particularly coming on the heels of 2017, and it might be appropriate to take a moment and quickly recap what's happened in the last 2 years. We started 2017 in a frenzied environment. Very low interest rates made the market available to everyone. Money was cheap, money was easy, but as 2017 made its way towards its end, the provincial government introduced the Ontario Fair Housing Plan, which included a 15% tax on foreign buyers. And then as the year continued, we had a number of interest rate hikes, and since then, until today, we've had 5 interest rate hikes, which have taken up the interest rate levels for borrowers substantially higher than where they were before. So cheap money, easy money, no longer available. It clearly is going to have an impact on the market, and we saw that in 2018. Started relatively strong, prices were strong, sales were pretty strong, but as the year went on, we had another issue to deal with, and that was mortgage stress testing, which effectively caused buyers to have to be qualified at even higher levels than the mortgage rates that they'd be paying. That obviously has had an impact on what buyers can buy, and we saw that in 2018. So as 2018 was coming to an end, these factors, higher interest rates, stress testing, foreign buyers tax, had all come to play in the mix of the Toronto area marketplace. And ultimately the results of all of those factors mixing into the marketplace were that we saw fewer sales as we came to the end of the year. And on top of that, we saw average sale prices being impacted. So at the end of the day, we had a little over 77,000 property sales in 2018. That compares to 92,000 plus sales a year before. The number of sales that we had in 2018 was the equivalent of the number of sales we saw in 2008 when we had our last recession. I think some of that will carry forward into 2019. In fact, it should be noted that on a global basis, a number of cities that had very, very impressive run-ups in terms of average sale prices and sales, and they're literally throughout the world, Toronto being one of them, Vancouver also being one of them, London, Hong Kong, New York, Sydney, Melbourne, Auckland, they're all experiencing some price retractions and retraction in the total number of sales. And all of them are impacted by the factors that I mentioned that came into play in 2018 in the Toronto market. Some form of stress testing making it more difficult for borrowers to get money, higher interest rates almost everywhere. And of course, all of these various jurisdictions have passed some kind of legislation that restricts foreign capital from making its way into its marketplace. So looking forward, as we look into 2019, considering all of these factors, something would have to give for the market to change dramatically for where it is now. The area that would be most appropriate would be, of course, higher wages, but wages have not kept pace with the increase in average sale prices. So the likelihood is we're going to see some retraction in average sale prices, probably slower sales, certainly in the first 6 months of 2019. But I anticipate when we get past midpoint in 2019, we'll actually see some higher wages. We may even see some retraction in borrowing costs. Bond prices have come down. They may make their way into the mortgage field, in which case we might see a slight reduction. If the economy is not as strong in 2019, we may not see any interest rate hikes by the Bank of Canada. So all of that coming together should see a stronger market in the second half of 2019 as some of these things become, you might say, acclimatized in the market, and buyers and borrowers become adjusted to them, and we see them make their way through the market in the form of stronger sales and higher prices in the second half of 2019. Thank you.